Okay, this might be a problem. Listen, I've been telling everyone there's not going to be a real estate crash. I've been saying that for the last 3 years, but there's some brand new data that just came in on Airbnb. It's shocking, it's surprising, and if it hits the market the way it could, it would be devastating and would absolutely lead to a real estate crash. Check it out.
One shot, now the future is yours. Go!
Are home prices about to crash? There are a handful of events that mess up every person's life, period, in the world. When there's a recession and you've had money in the stock market, 401ks, IRAs, and that goes down, people panic. And then within a number of years, it comes back, generally no longer than 36 months. But when the real estate market crashes, it can last a lot longer than 36 months. And honestly, it's been one of the most Googleable phrases out there, people wanting to know what's happening to the market, what's happening in real estate, what's gonna happen, because you gotta be honest, since that pandemic, it's been kind of crazy. And there's some new data that's just come out that honestly affects my tone on this matter. So what I wanna do is I wanna talk about Airbnb. I want to talk about the short-term rental market. Remember, a market that didn't even exist. It literally was birthed out of our last recession. So it hasn't even been alive for 15 years. And check this out. Revenues are down nearly 50% in cities, for example, like Phoenix and Austin. Wait a second. Airbnbs are down 50%. Think of the people that bought a house, they're Airbnb-ing it, and if they've lost 50% of the rents, there's a good chance they're upside down, they're losing money. What are they gonna do with that home? You think they're gonna keep it forever? In San Antonio, Nashville, Denver, New Orleans, Seattle, and Orlando, they saw revenues drop at least 34.8% between May of 2022 to May of 2023. All this basically means across the board is that if that market is gonna go in the dumper, and if all those homes go in foreclosure, what does that mean for the market? And to understand that, you have to actually ask, how many Airbnbs are actually out there? How big of a market are we actually talking about? First of all, why is this actually happening? Due to the recession, people are vacationing less, and according to Newsweek, nearly 50% of Americans won't be taking a vacation for a while because of inflation and the higher cost of living. They also said that 60% of those who are going on vacation said that affordability still played a huge role in their planning. When people are tightening the belt, and they're hitting that budget way harder because there's no discretionary income, the first thing that gets cut is luxury. And vacationing is definitely a luxury item. The cost of an Airbnb, by the way, has risen so much that they're now on par or even sometimes more expensive than a hotel. People are also getting sick of all the extra fees that come with Airbnb, like the excessive cleaning fees. Airbnb had a heyday, right? It was like, wow, we can actually beat out the hotel industry. We can provide something better, something more intimate. And while that is definitely preferential for some, its rising costs are starting to compete against what already exists, the hotel industry. And people are starting to say, I don't know if Airbnb is the only way to do this. If there's a cheaper option between the two in this kind of economy, let's do that, which means Airbnb is getting screwed. So here's the math that has me seriously concerned. The United States supply of Airbnb rentals exceeds the number of available homes for sale by around 380,000. By the way, 2008, there was roughly around 2.5 million homes for sale. We've dropped to an all-time low period of just over 1 million. So you add 380,000 to that, and right now that means that there's probably somewhere-ish around 1.5 million Airbnbs. That is a significant number that has the ability to really move the market. Airbnb owners may begin selling their properties, which might cause a mass influx of homes to enter the market, and this is either gonna push prices down, or Airbnbs are usually more expensive homes. So if they list them and they can't sell them, they may end up just turning the keys into the bank and going belly up in foreclosure. That also has a negative impact on the market and leads to a crash. Now, people always think that a crash is like the worst thing that could happen. If you're an investor like I am, a crash isn't bad. A crash is actually a good thing because there's big problems and someone's got to clean up. And when you get clean up, you get paid the stuff to do that. But I want you to be able to understand what might take place in the market, because there could be a benefit for you. If home prices begin dropping, it could make it more affordable for millions of Americans who are trying to get into a home to actually get a home. So right now, Zillow's saying, hey, we're expecting by June 2024, a 6% increase on the price of homes. And in the top 50 out of 200 areas, a 7% increase. What that basically means is prices are scheduled to continue going up. That's the forecast. But if Airbnb continues having really big problems and they flood the market with properties, really expensive ones, it could actually suppress and drive the prices down. I'm not so sure that that would be the worst thing ever. That doesn't mean that we spiral into a crash, but it does mean prices come down and there's an affordability opportunity. The median home price across the United States could drop, giving you the opportunity to pick up also some investment grade real estate. Like there was a foreclosure that came on the market and I got a really good deal on this particular house because there was a surplus of that kind of inventory. Real estate is also amongst the best ways to become financially free and creating generational wealth. It is in fact how 90% of all people become millionaires, like hands down. They own a handful of homes, they appreciate with time, they get to retirement and they're like, wow, I saved up some money for retirement, but the amount of equity I have in all of my real estate is really what's making me a millionaire. Do I think Airbnb is going to lead to a crash? Not likely, but it is a new factor that I had not been contemplating. So I'm going to be keeping a really careful eye on that. But it also begs the question, like, if the market goes up or down, is it bad? And for me, if the market goes up, it's good. And if the market goes down, it's good. It just means that you have to stand on the right side of the fence when those things happen. What if there really isn't a crash? Well, the beauty of real estate is that there's really never a bad time to invest. Sure, right now may not be a great time to buy your dream home, but it's a fantastic time to invest in real estate as long as you know where to look, as long as you're in the right markets, as long as you're buying real estate below the median, you follow the rules that I teach you as a subscriber. And with high housing prices and interest rates where they're at, people are willing to wait and allow investors like us to come in and find the really good deals. But make no mistake, in the next 2 years, before we get a new president or don't get a new president, they're likely going to be dropping the rates. That's what all of the indicators are pointing to. And if rates drop, like some predict, to 5% or Morningstar even says 4%, what that's going to do is that's going to skyrocket the price of real estate again. So the likelihood of a drop, not very big. The likelihood of a hike when rates come down, really, really high. In either case, as long as you own real estate as an investor, you're in a good spot. If you want to get in on the game of real estate, now is a perfect time. But you might be saying, Kris, I don't know how, or I've got a job, I've got a family, I don't really know how to get into that game. And the good news is I can do all of it for you and make it entirely turnkey. Literally every single day, someone in the world watches a video like this and becomes my partner. And what they have is a little bit of cash that is stashed in a 401k or an IRA, or they have a house and it's gone up and there's some equity in that and they get a home equity line of credit. If you access this money and you put it into investment grade real estate and you're earning at least 25%, $50,000 earning 25%, you know what happens that over 20 years? Grows into $4.3 million. And this is one of the biggest reasons why people watch me on social media, follow me, and choose to partner with me, is because they're looking for a way to get in the game, because they know that the gains are not going to be found in their 401k or their IRA or their stock portfolio. They're looking at how they can invest in real estate, but make it as painless as possible and yet as successful as possible. And partnering with me is definitely a way of doing that. And I don't really know of anyone else in the market that's doing what I'm doing, but you can do it with me. Click the link below, and there you're going to learn about partnering with me. You're going to learn about what I've done on my last several thousand homes. And if it feels like a fit, all you have to do is drop in your name, phone information. Me and my team will contact you and basically start a vetting process to find out whether partnering makes sense. Because if it does, and I partner with you, you get my cell phone, my team does all the work, and we start crushing it in real estate. By the way, if you're thinking of selling your house in 2023, don't do that. That would be a massive mistake. And if you want to know why, click right here and watch this video. I made it for you.